All right. Retail trading secrets for losing to consistently winning, 7 ways. Okay, my background: Brian Downing, well known as a YouTube partner in the automated trading niche. I have a LinkedIn profile that's in the top 1% viewed most profiles on the entire site. I have over 8,000 members in one of Facebook's fastest growing groups for trading software knowledge. Also, the creator of quantlabs.net, and I've been researching high speed trading platform technologies and trading strategies for the last uh, 6 years. And that's basically what I'm going to present. X-nay that. Alright, so let's talk about the classic retail trading trap known as the 90-90-90 club. So basically, what it means is that 90% of retail traders will lose 90% of their entire capital within 90 days. There's a number of reasons for that. First is the concept of technical analysis. Basically, what you're doing is when you're using technical analysis, which is very popular among retail traders, they download it, they look at it via popular blogs or YouTube channels or whatever. But basically, what you're doing is just chasing after past data or continuous data, which is present. Your real job as a trader is to forecast maximum return potential at the lowest risk. You cannot forecast off of historical data since everything in the markets is pretty well a random walk. You also cannot predict the markets of patterns unless you have powerful real-time software that can highly scale on very expensive computer hardware. Now, fundamental analysis is based on simple supply and demand. So, for example, in commodities, as in the low pricing environment of oil, within the market glut, that with the supply and demand in the markets, that's how fundamental analysis is based off of. So what you need to remember is that supply and demand has worked for many decades in open cry pits before electronic trading came into place. So the markets dynamically move exactly with the same concept today, but this concept of fundamental analysis, primarily around supply and demand, seems to have been forgotten. So another popular way of trading is day trading, which does not work for market regimes. You may get 20% of an opportunity to day trade when pretty well the markets go into some kind of profitable momentum mode. Another way of saying that is that the market is just basically going up. Most of the time you'll spend managing your portfolio to measure risk for maximum return. You will need to figure your trading performance, for example, if you use Kelly criterion, and also use position sizing against for optimal portfolio balance. Optimal portfolio balance, excuse me. Basically, no human trader can accomplish this without software. Now, another big thing is, how do brokers screw you? These are basically for forex traders, offshore brokers, but there's a lot of traditional retail brokers that will try to screw you as well. There's about 11 different ways. So the big one, if you're in forex, is that MetaTrader software is definitely a big red flag. So if they're not based in primary countries like USA, they're usually based in strange countries like Cyprus. Also, for these type of brokers, over 30% of their entire operational budget is basically marketing their services, because about a very high percentage of their clients will blow out their accounts, so they need to replenish those clients as they drop off. Also, these brokers offer a lot of leverage of up to 100%, 100 times. So when you lose, you need to pony up those losing trades. Now, obviously, brokers will have some form of a credit facility. So what they'll do is they'll take large bets on the losing end where they want you to lose. The more risk you take on, the more risk they take on, the more they make. They also make traditional dollars through, obviously, commission fees. Now, another thing that there's some myths out there, or misconceptions. The higher the spread, the more they want you to leverage. Now, for Forex, a lot of these brokers will promote popular cross pairs, for example, the euro against the US dollar, or the British pound against the US dollar, where there is very little or low volatility moves. You need to focus on more exotic volatile pairs. Also, these brokers want to confuse you with the measure of pips versus small units of percentage of change or basis points, which are easier to convert and measure. They also want to look, what you need to do as a customer of theirs, you should try to look for their carry or their rollover, which is listed from your broker. Legally, they need to list this publicly. Basically, if you don't know it, you will lose money for no reason due to being unaware of this. So you should Google these topics. Now, another thing is a lot of the founders are usually shoddy. A good example is if you look at the Wikipedia posting on FXCM, you'll see some pretty well unknown lawsuits that founders of brokers like FXCM have gone through, who are pretty well the largest retail Forex brokers out there. Now, what are the solutions? A general good broker is Interactive Brokers. They support many or various programming languages and other technologies. You can demonstrate using a paper account without needing to register with them. Their trader workstation software is not too bad to start from if you're starting out. I've also got another book on how to use Interactive Brokers. That's my algo trading book, so check that out there. Also, for traditional traders who want to use Forex, there's two good brokers that I could probably recommend. The first one is Oanda. You can start pretty well as low as $5 to fund your account. They do offer automation support or programming support, but from my understanding, it's fairly limited still, but it can be done. Also, there's LMAX. Now, the nice thing about LMAX is that they're market neutral, so they're not going to do any weird market making against you. So, I get a lot of horror stories from my community of traders or experienced traders, automated traders, and such. I wanted to give you an example of one involving MetaTrader 4, also known as MT4, and just give you what they sent me as an example of what these Forex retail brokers do. So basically he says, great read, Brian, totally agree. I was approached by a pro retail trader that wanted me to program some MT4 algorithms he had in mind. He had little FX experience and I had none. We used several brokers over 5 years and I literally wrote hundreds of experts, or basically known as expert advisors, or auto trading MT4 scripts and algorithms. Many would make good profit to start, but something would always happen, many times a spike that did not occur on my demo accounts with the same broker. Of course, this can be explained. Sometimes one big profit was actually one that went through my stop by many thousands on high volume. The broker said he would only pay me up to the stop and the rest was a technical error in quotes. Albeit had the stop loss been crossed in high volume, he would have told me that it was too bad and he can't guarantee the price in high volume, which is part of their agreement. For sure, MT4 brokers are a scam, for sure. So the question is, what can you do about that? And what are some of the 7 tips that I like to give for if you want to consistently profit? So the 7 steps, the 7 tips I can give you is you're dealing with an asset or a barrier. So what you need to do is you need to overcome the technology so that it works for you. Number 2, you must challenge what I call your inner scaredy cat. Number 3, how not to waste your time. I've had virtually a $30,000 mistake. 4, don't get ripped off. Apparently there's 4 easy steps to avoid trouble. Raise your confidence. Here are 4 fastest ways that I know. And the last step, tap into wealthy insider know-how with top industry secrets. So the first step is asset or barrier, how to overcome technology so that it works for you. Basically what you're doing is, the key idea here is you want to make sure you're not going down some set of rabbit holes to emerge with nothing to show for your efforts. Because yes, rabbit holes include so-called industry-grade technologies. But from my experience, from a technology point of view, if you are interested in going down the automation route, I would stick with Python as a programming language and or Swift to learn the development skills which are taught for kids. Just so you know, if you ever wanted to get into quant analysis research, over 90% of these high-paying jobs involves coding. And that is a real industry fact, okay? So the second tip is why you must challenge your inner scaredy cat. What you need to make sure is you have some form of structure. You need a roadmap and a sense of direction. You also need a sense of community, as in people with common goals, to help you seek your lucrative trading opportunities. Obviously, these can be harder to find than you think because typical weaknesses are in most trading forums. The problem with a lot of these trading forums, even though they're free, there's a lot of negative and rude members. Sometimes digging to discover real information takes a lot of time. And also a lot of these forums have sponsors and reps who just lurk and pump up their service at every opportunity. And then you wonder, is this really objective advice that you're getting? Another tip that I can give is how not to waste your time. So the first thing is you want to reduce the hidden costs of open source. Because sometimes if you're going to use a language like R, you're going to get a lot of incompatible packages. And if you're going to stick with trading, you want to make sure that those trading scripts are going to work 5 years from now or 10 years from now. So you want to work with something that's going to enable those scripts to be future-proof. Very important. Now, the rest of these tips I'm going to give you will help you give you trading edge. This is really also important. The next tip is you want to make sure you're not getting ripped off. So here's 4 easy ways to avoid the trouble. The first tip is obviously follow generous people on YouTube. You can get a lot of good ideas out there. To narrow it down, the second tip is you want to follow innovative ideas. A good example is our dear friend Dr. Ernie Chan, who comes top of mind for that. A third tip is watch over the shoulder for multi-millionaire insider traders with special access. That's pretty hard to get, but sometimes you may be needing to pay for that. Another thing is you want to try to be influenced by the early adopters. Now, if you can get news on people like James Simmons of Red Tech, Renaissance Technology, and remember, this guy is making billions of dollars personally every year, even though he's retired. He's still an innovator and an early adopter. So if you can follow those kind of large traders, algorithmic based or automated traders, this is just one resource or one tip I can give you. Another tip is you want to make sure you're not going to get ripped off. So the first thing you need to make sure is you're accumulating the right knowledge and obviously using the best software and platforms that you can get access to. Because what you want to do is you want to save a lot of money or a bundle. Now the thing I've learned from a lot of the so-called multi-millionaire insider professional traders who run hedge funds is the consistent pattern I'm getting is that simple is best. So the idea here is you want to make sure that I can help you focus on that right now if you can. The big tip is that over the long run, there's a lot of this so-called advanced or PhD level math. Now, if you can, and you're like me, you want to try to figure a way to actually reduce it to more of a preschool level to understand it. And you want it to be a lot simpler so you're not worrying about it right now. Okay? So one tip I can give is you want to make sure you use easy to understand online resources. The ones that I like are Khan Academy and or Bionic Turtle on YouTube. A second tip are technical books that are really easy to understand. As I mentioned earlier, Python's a great resource for it. But a lot of these resources I'm about to give you are pretty well game changers. They're very popular for their own reasons. And this is obviously focusing on automated trading. The two resources I can give you are QuantStart and Dr. Yves Iplish. I hope I got that right. Which is obviously done in Python. The fourth tip I can give is you want to make sure you're using tools to simplify your math. I'm not expecting people to know MATLAB, but MATLAB's MuPad is quite good for that. Or if you want open source and free, the Jupyter.org in Python's quite good for that as well. Same functionality. Now, another big step for consistent profit is you need to somehow raise your confidence. So over the years, these are the fastest ways that I know how to do this. If you can, somewhere out there, you want to make sure you're going to be introduced to capital providers through a community, however means. Some people might think it's a step too far. When you think about it, it's not really, but it gets kind of exciting when you do get them and you can show them some form of a roadmap where the profits will really come from. From that, you want to showcase and focus on a potential trading strategy or trading model. You want to focus on which instrument and what frequency you want to trade at. From that, this roadmap that you get and develop, you will be able to obviously raise your confidence. Now, the last big tip to get consistent profit is there's 4 ways to tap into the wealthy insiders. Once you do it, this is where it gets really interesting. If you can tap into expert level knowledge immediately. You need to know where to look. You want to find those that are willing to share the top industry secrets. There's a lot of thousands of blogs out there, but the ones that are probably good starting points are Wilmot.com and Quantnet.com because they got popular forums. A second method you could find these so-called wealthy insiders is through hundreds of videos that these various people that you look up to may post. And some may actually post hundreds of videos. So that's another way to network with the proper traders that are top dogs, and obviously hopefully are wealthy enough for you to be inspired with. A third method to find these people is make sure if you go to a resource like GitHub that there is countless of software open source code out there, and there's a lot of projects that they may recommend or even contribute to or even comment on. So look for those kind of projects. And lastly, which I really like, is if you go through LinkedIn groups, you can find a lot of banking and hedge fund executives, and then you can connect through those groups through them and introduce yourself if you start to prove yourself on your trading ideas. So hopefully this will be good for people who are starting from the retail world, wanting to move into the algorithmic world, on top of 7 sets of ways to consistently profit and build your empire or wealth. Hopefully you enjoyed this book. Over and out.